Okay. We were trying to solve question on impress order cash book yesterday. We solved the revenue collector cash book. We are now looking at impress order cash book when we had an issue with the network throughout. Now let's look at that. From there, we'll now go to the next level. Because we have about 2 questions to solve. We set up the template yesterday also. Is that not so?
Yes.
Hello? Yeah. Now let's look at it together. Let's look at the question first before we move down to what we're supposed to take. And others have not joined. What are the questions we have under the impress order cash book? Can we review the question before we move down to the point? Okay. The question starts from, there is the monthly flow granted is 80,000. The mean cashier reimburses an amount spent on the last day of each month. The following transaction took place in the month of November 2008. Now, what are those transactions?
Okay, we can see it now.
Yeah, that was where we stopped yesterday. Now, look at the question we are meant to solve. We call it what? Impress holders cash book for the month of November. And it has a what? The following content: date, reimbursement details, number of bank credit slip, cash, bank, date again. The first 5 columns there, that happen to be the debit side, while the credit side start from another date, to whom payable, PV number, check number, cash, bank, analysis column. Now, we need to pick it up from there and see how to go about it. Now, looking at the 80,000 given to us in the question, what was that money meant for? Do you have the question with you?
Sorry, sir. Page, what is that question again, sir?
That should be coming. Someone is raising up his hand.
I wanted to ask of the page number, sir, please, so that we can follow up.
Okay.
And a suggestion, please, since you are using an Excel sheet,
Page
is it
22.
possible for us to have all our
Starting
solutions?
from page 21 to page 22. The monthly
number.
float. Can we see the page? Question number 5. From page 21 down to 22.
Okay, we can see the page.
That monthly float granted is 80,000. What does that 80,000 meant for?
Impress.
That is the impress issued out. Then we come here. Let's go to solution page. Then under the date, we have 01/11/2008. What is the cash float given to us?
80,000.
Cash float. Since it's cash they gave to us, it is not check. If it is check, it's going to appear under bank. But since we were giving cash, that will appear under what? Cash, 80,000. Now, what are the analysis we are meant to do regarding to this? Under the analysis column, how many transactions are we given to work with? Under the analysis column,
5.
is it 5?
Yes.
We have what we call the motor vehicle expenses,
Yes.
postage and stationery,
Stationery, 2.
office entertainment,
Entertainment, 3.
sundry expenses, and ledger column.
Yes.
We need to create that now.
So
Since we
that's
have, can you call them one after the other for me under the analysis?
Yeah, in the analysis,
Motor-
right?
Motor expenses,
Motor expenses,
postage and stationery,
I'm coming, motor expenses. The second one, postage and
postage
stationery.
and
Postage and stationery. What else again?
office entertainment,
Office entertainment. What else again?
sundry expenses,
Sundry expenses and
lastly ledger column.
ledger column. Okay, we put our Naira account, Naira value here. Someone is raising up his hand.
Answer. Is it compulsory to use cash at bank? Because we are not specifying the place the transaction is going, whether it's cash or on check.
As far they did not specify is check being issued to the petty cash officer.
Okay.
Are you with me? We assume it
Yes,
is
sir.
cash. Yeah.
Okay.
I didn't mean they specify it is what?
It's bank.
Check issue. Then that will now be in another account. Yeah, let's go.
November 1st.
November 1st. What do we have there?
Tea and sugar. Tea and sugar.
Okay.
4,000 naira.
That one will start from the other hand here. 1/01/11/2008. Tea and sugar. How much is the amount?
4,000 naira.
4,000 naira. Then that amount will also appear. You can now generate, since, are we giving voucher number?
No, sir.
Now you can generate it yourself. You assume that the voucher number you are using start from 1 to the end where you are ending the transaction. This will now be 001. That's the voucher. Let's say 1. That's the first one. Okay. Now that tea and sugar should appear under what of the analysis column?
Under sundry expenses.
Under
Office entertainment. Office entertainment, sir.
Yeah. The second one. What's the date?
November 3rd.
3rd.
Purchase of petrol.
Petrol. Petrol. That one will be under what? O2. That's invoice number. Payment voucher number 2. How much is the figure?
800 naira.
800. That will be under where?
Motor expenses.
Okay. The next one.
November 4, postal service.
So, hello?
Hello, sir. Postal service, 2,000 naira.
Okay. I'm seeing this. I'm still at the center. I'm lecturing online, please. Yes. I'll come and see. No problem. Sorry, please. It's one of the students. This one is postal order, Abi.
Postal service,
Postal service.
2,000 naira.
2,000
Under postage.
under the postage. The next one.
Postage stamp, November 5.
November 5.
Under postage, 1,000 naira.
Postage stamp. Coming. Postage stamp. That's for 1,000 naira. Abi. Put it under
Yes,
the
sir.
postage. What else
Yes, sir.
again?
November 6, envelope,
November 6.
₦2,000 under postage and stationery.
Envelopes. 2,000 naira. Abi.
Yes, sir.
Stationery. Okay. The next one.
Purchase of petrol, November
date?
8. November 8, 1,000 naira.
Petrol.
Motor expenses,
Yeah. 1,000 naira. Did order the motor expenses. The next one.
November 9, gift, 4,000 naira.
How much?
4,000 naira.
4,000. That will be under sundry.
Yes, sir.
What else again?
November 12, purchase of petrol, 800 naira.
November 12. Petrol. ₦800 naira. Abi.
Yes, sir.
Under motor expenses. The next one.
November 13, postage stamp,
November 13.
postage stamp, 200 naira.
Postage stamp. 200.
Yes, sir.
That is under stationery.
Yes, sir.
The next one.
November 15, Alhaji Giwa, ledger accounts.
That's 15. Ablaji.
16, Giwa,
How
16,000
much?
naira.
How much?
16,000. 16,000
Okay, that is going to ledger column.
accounts.
The next one.
November 16, Olamide, 10,000 naira under ledger account.
How much is that?
10,000 naira. 10,000.
10,000 naira. The next one,
November 17, waste paper basket, 600.
waste paper
Basket,
basket,
600 naira.
600 naira. Go to sundry, but we don't have column for anyone relating to that. Okay, the next one,
November 18, purchase of stationery, 4,000.
stationery,
4,000 naira.
the next one,
November 19, purchase of engine oil, 1,000 naira.
next one,
November 19, toll gate fees, 80 naira.
November 19 again, Abi.
Yes, sir. Toll gate fees,
Toll gate fees. How much?
80 naira.
80 naira.
Yes, sir.
That's under motor expenses. The next one,
November 21, Aruna, 12,000 naira, ledger account.
how much?
12,000.
12,000. Then we take it to ledger account. The next one,
November 24, tea and sugar, 4,000.
how much is that? 4,000.
Yes, sir.
Next one,
November 25th, biscuits, 1,200.
$4,000.
1,200. 1,200.
1,200. That's also going to under entertainment. What else again?
November 27, calculator, 1,400.
$1,400, Abi.
Yes, sir.
That should be under the stationery.
Yes, sir.
The next one,
November 30th, petrol and engine oil, 2,000.
how much is that? 2,000.
2,000.
What else again?
November 30th, servicing of official car, 1,200.
Servicing of
Official car.
official car. How much?
1,200.
What else again?
Nothing, sir.
That's what I mean.
That is all.
Yeah, we now look
Yes,
for
sir.
the total. We look for the total of everything here. Now, this is the total. We also look for the total of the cash column here. And that total must also be equal to the sum of what we have there. Let's confirm. Now, from here now, we now look for the as at 30th 11/2008 balance carry down. Your opening balance must equal to your closing balance under petty cash, not the one you are using in your office, please. Do you understand? Is it clear?
All right.
Yes, sir.
Now, when we now add it together, we have the total sum of this. We close it here. When we close it, this is the area of the interest of the examiner if this question is coming out. Now, we come to this side, the debit side under the cash. Now, under here, as at that what, 30th November 2008, we have total expenses we are accounting for. Our total expenses said to be
61,480.
We now enter it here as this, which is the same thing as this now. Then we now come here as at 1/01/12/2008. We have the cash float, which is your balance brought forward, which is this 80,000. That's how to go about it. Any question?
Wait on, sir.
Yeah.
Sorry, sir. These personal accounts of Alhaji Giwa, Olamide, and one other person. Why are we having personal accounts as part of the interest cash?
In some situation like that, in petty expenses, they pay some individuals some money. When the payment like that comes like that, you put it under the ledger column. Those ones are meant to go to the normal ledger accounts. It happens like that. That is why we created the ledger account. Ledger account is for individual, which is the personal ledger. When it is like that, as far the money is small, as far the money is not much, it's not big, which is huge amount of money, it will not appear, but those figures are not huge. That's why they posted them in the ledger account column.
Okay, sir. Now we are having balance carried down. Can we put that one as balance carried forward since we are having brought forward at the debit side?
Yes.
At the debit side, we said what you open with, the cash flow they gave should be your closing balance, which we also have as we serve as the opening balance in the following months. That is the principle of what? Of interest system or petty cash. The one you are using in the office is not correct. because the difference between the opening balance and the closing balance, the remaining amount should appear in the treasury cash book that you are going to give to the sub-accounting officer as retired, petty cash retired. And the money they will issue to you will be your closing balance in the closing month end, which will also serve as the opening balance in the following month.
Okay,
the one
I
we are
got
using in our office that they normally give us add money to what we have is wrong. You are meant to retire the balance, the one you did not spend, the amount you did not spend should be retired. They will not give you fresh amounts, which will be your closing and also serve as your opening.
okay, so I got the calculation. The narration I was talking about. Can we quickly say balance carried forward since we are having it as brought forward in the following month?
Yes, now that's what I put it here. Cash
No,
flows. And I put it as balance brought forward. And you can call it carry down. It's still the same thing.
Okay,
The
sir.
F and the D is what she's talking about. It doesn't mean anything.
F and D.
That's balance brought down and balance brought forward.
That I only
F here.
indicate for you to see that it is the balance brought
Yeah.
forward that is same thing as balance carry down. I indicated it there.
Thank you, sir.
You are welcome. Another person is raising up his hand.
Yes, sir.
Ayodeji.
Sir, what of in the case that maybe before the end of the month now, like the 80,000 now, which is our cash flow now, we have already disbursed this finish, and we are now requesting for another one. Is it not going to change our balance carry down? That's what I want to comment, sir.
Now, as ministry is concerned, before the ministry approved the interest, they must have monitored what you are meant to pay money for. If that is not part of the transaction, they don't expect that it should come out from the what? Interest. They don't expect you to exceed the amount they approve for you. It's either you spend the entire figure or you have a balance. You cannot use your own money. But if there is a particular special project that they want to work on, they will rather issue another money for such a project. They will not issue it from that particular work petty because it will affect the petty process or the interest what processes.
Okay, sir. Thank you, sir.
Any other? Now, absent of no question, our next question is what? Vote book. Let's go to the question page. Can we go back to the question page? Are we on the question page at your hand too? Can you see it?
Yes, sir.
Now, let's look at the next question number. Okay, before we answer that, B part of the question now says what? Show the books of account to be credited and debited by the mean and interest holder as at 1st of December 2008. What are the accounts to be debited? What are the accounts to be credited as at the beginning of the new month? Is it clear? Hello, do we get it?
No, sir.
No.
The question says what? Shows the books of accounts to be credited and debited by the main and interest holder as at 1st of December 2008. Now, interest holder is the one managing the interest, managing the petty book, the petty cash book. Why the main treasury what? I mean account officer, that is the officer managing the treasury cash book. Do you understand? Which is the officer in charge of the sales. Are you with me?
Yes,
now,
sir.
in the process of now posting, they will release 80,000 naira for you at the beginning of the month. That 80,000, the main cash book will be, the main cash book will be credited. Why the petty cash book will be debited with the same amount. Do you understand what it means? We credit the cash book account, mean treasury cash book will be credited, while the petty account will be debited.
Sir, please,
Are you
this
getting
what
me?
you are explaining. What you are explaining now, can you type it under this sheet we just saw for question A, so that saying it we can comprehend what you are saying, sir.
What do you say? Hello?
This B you are explaining, I'm pleading if you can just on that your Excel sheet there, just make the posting so that we can really understand what you are trying to explain, sir.
Okay, I will post it on the page where we are working now. Now, looking at it from here, let me change to the question page since we are clear with the question. Now, look at it here. Can you see the question page? Hello, can you see the question page? I mean the solution
Yes.
page.
Yes,
Yes, we
yes.
can
Now,
see your Excel sheet.
yeah, they are now saying that which account is meant to be debited and which account is meant to be credited. Now, looking at it from here, treasury cash book now. Treasury cash book. Treasury cash book and interest holder cash book. Now, this will be what? Credited. Why this will be debited? Is it clear? Do you understand what I'm saying there? Because
Okay,
the
sir.
treasury cash book is
Yes.
credited in the sense that the money has gone out. Debit the receiver, credit the giver. That's the normal accounting standard. Double entry principle. Debit the receiver and credit what? The giver. Now,
Can you
cash
just
book are giving out money. The treasury cash book being managed by the sub-account officer. Sub-account officer give out money to the interest holder officer. The money has gone out from the treasury cash book. That account will be what? Credited. While the interest holder officer received the money, the account is managing will be debited at the beginning of the year, at the beginning of the month. Is it clear?
Yes.
That is the solution to that part. Now, if the question now say at the end of the month, which account will be debited and which accounts will be credited, that is another dimension. That will now bring on force towards what we call what? Journal entry. I believe all of you understand what journal is all about. Do
Yes,
we
sir.
understand journal?
Yes, sir. Yes, sir.
Now, the journal proper will be used in that procedure to be able to know those accounts at the end of the November, what accounts are meant to be debited and what accounts are meant to be credited. Do you understand? Now, in the petty cash book. Now, in the petty cash book, all the analysis column, they are the expenses that are meant to be what? Accounted for by the petty officer. That officer will now remit the money and the expenses to the treasury, which is the sub-account officer. Now, those expenses there, we are going to account for them at the credit side, that the money has gone out from the petty officer. And the petty officer received 80,000. The remaining balance will also be moving out from that account down to the account of what? Cash book. We see the analysis of what I've made mention of. Now, this one at the beginning of what? At the beginning. Hello, good luck. Where are you? Please come with your extension, please. My system is stop fast. Okay, I'm with you. You raise up your hand.
all right, sir. This B now, understand it. It says show the books of accounts to be credited. 1st December, that is like the close of account. Is that what you are
1st
trying
of
to
December. No, 1st of December is the beginning of new month. End of November, that is the end of the new, that's the end of the what? End of the month. Which account is meant to be credited and debited at the beginning of the new month? Money is going to come out from the from the treasury holder officer, which is the officer managing the treasury cash book. That is sub-account officer. Money is coming out that will be given to the petty cash holder to operate for the beginning of that month to the end of the month. And in that scenario, money is coming out from the treasury cash book. That account will be credited. The account that is receiving that money will be debited using the principle of what? Debit the receiver and credit the giver. But the reverse is the case. If they ask you to account for the account to be debited and the account to be credited at the month's end, the scenario will change. Do you understand what we're saying?
All right, sir.
Sir, this one that you are showing now, is it at the beginning of November or at the beginning of December?
This one is at, let me indicate, as at 1st, as at 01. Thank you. 2008.
With how much now? The amount.
Okay. Now, after that particular period, December 1st, do you understand? Which is the beginning of that month. The account that you are going to credit as at the beginning of the month, mean treasury cash book will be credited, while interest holder account will be debited, because we debit the receiver and credit the giver. Do you understand? But the reverse is the case. When they ask you what account is meant to be debited and credited as at the end of November. Now, as at November 31st, as at 30th November 2008, what are the accounts to be debited and what are the accounts to be credited? The scenario there will change. Now, look at it here. Debit, credit. Now, as at the beginning of that November, the interest holder received what? Cash. Excuse me. Now, the interest holder received what? Cash, which is what? Cash float. Look at it, please. Cash float. Thank you. Now, the cash float received will be debited in the petty cash book of that particular officer. 80,000 is here. Now, the officer spent that 80,000 on the following expenses. What are the expenses? What are the expenses, please?
Motor expenses.
Now, motor expenses. motor expenses,
Postages and stationery.
what else again?
Postages and
Postage and
stationery.
stations.
Postages and stationaries.
Office entertainment.
Okay. Office entertainment, followed by
Sundry expenses.
sundry expenses. The next one,
Ledger.
okay. Now from there, all those transactions here, this, this is the third one. The fourth one, cash retired. That's the cash book. Now, if we look at the balance we have here, 80,000. Is that not so? Close it. Then here, supposed to be 80,000 too. But it's not 80,000. Are you sure the figure you gave me at the other hand here correct? I'm coming, let me check. What's the total expenses we have?
61,489.
Yes.
1, 2, 3, 4, 5. 5. Oh, what we have also have here is 5, Abi.
Yes.
Okay. Now, this minus the total sum of this. The remaining balance is 10,750. Is it correct? Is it correct? Yeah.
Yes, it's correct.
This is the analysis of what you have done in your petty cash book in summary. All these have gone out. This is what this officer received. The officer received 80,000 and spent the money on the following expenses, and this is the balance. Now, taking it down to each of the accounts, then this account, if you want to open this by ledger, motor expenses ledger, this account from petty account has been credited, the motor expense account will be debited with this figure, Postages and stamp has been credited here in the petty cash. When you get to the what? To the postages and stationery account, that amount will be debited there. which we are using what we call double entry principles. This is what you do at the end of the month, while the first one is what we're meant to do at the beginning of the month. Any other question?
Sir, at that 5th of December, sir, which amounts will be credited and which amounts will be debited? At
Is it
first
the
of
amount you're referring to all the accounts?
no, in each of the accounts you've written down. At the 1st of December 2008, we credit treasury cash book and we debit interest.
80,000 is the normal amount, which is their interest. That's what is going to be what accounted for.
Okay.
Any other question? Yeah. Absent of no question, we are meant to look into another account. Now, let's go to the question page. Question number 6. Can we look at that question number 6? The following transactions were recorded in the... Do you have it at your hand there?
Yes.
Yes, sir.
Yes, sir.
Now, what they say we should now prepare in this account? Let's look at it.
Departmental vote.
Departmental vote book. And they now say state 5 means that can be adopted by the Nigerian government to control public expenditure. That was the last question being given to us there. Now, on that note, how do we meant to recognize and how do we meant to go with that next question? We need to prepare vote book. Now, let me move down to the solution page again. Can you see the ledger page at your hand?
Yes, sir.
Yes.
Okay, now, we are now meant to prepare what? What's the name of the organization? Are we giving the name of the organization in the question?
Ministry of
Ministry of
Education.
Education, okay? Now, Ministry of Education, okay? We are meant to prepare vote book. For which month? Could they specify the month?
The month of August.
Month of August.
Month of August, okay? Departmental vote allocation departmental expenditure allocation vote book for the month of August 2008. Now, on this, what are the things we need to put at the head? The first thing is the head. We have subhead. After those ones, we also have what? Services. Now, at this head, we have what we call AGW, AGW. We have AIE. We have total. We now have others. I'll put it here. Departmental. Root. Group. Now, at this side, before we put at that, we have what we call line 1, line 2. This is a line, the line item, line 1. The 2 is what? 2, 3. To 15. Then under each here, this one we have the date. After date, what do we also have? Particulars.
PV.
Do you understand?
PV number.
PV number.
After which one?
After the date.
Okay, PV number. PV number. Followed by
Particulars.
particulars. Particulars. After that particulars, we have what?
Payment.
Payments. After the payment, we have cumulative. Have you cumulative payment? Have you?
Yes. Then balance.
Cumulative payment. The next one we have balance.
Yes.
After that balance, we have
Liability reference.
liability reference. Correct. The next one, liability incurred, Abi.
Yes, sir.
Followed by liability cleared, Abi.
Yes.
Followed by outstanding liability, Abi.
All right, sir.
Then the next one is what? Remark, Abi.
Yes.
No. I'm
It's
tired.
telling what we have done. Coming. coming. I want to extend each of those transactions and be very clear. Now, the next one will not be remarked. Abi?
Yes, sir.
Then the last there will not be uncommitted balance.
Okay, sir.
Okay? Now at this side, from this place to the balance side, that is from 1 to 7, that one is referred to as expenditure side. Is it clear? Expenditure. Why from here down to this place, that one is referred to as liability side. Any question, please?
Good afternoon, sir.
Afternoon.
I just have a question. The headings, that's just my problem. All this line one, all these particulars, payment, cumulative, balance, liability, like all these ones, I don't even understand what's even happening here, sir.
Okay, now, first thing we need to understand here, this particular book, what does it mean for? It is a memorandum account for monitoring public spending and public expenditure in order to eliminate the issue of extraordinary spending. Government want to monitor what they have allocated to you. How do you spend the money? Is it on what they have approved or you use it for another thing? Do you understand? Now, there is an officer in charge of this. We call it officer in charge of both book. Do you understand? Now, looking at it from here, how does it look like and what are you meant to do? No officer has the power. No officer has that power to incur any expenditure without approval coming from the Minister of Finance, including the Accountant General. Accountant General cannot spend any money without approval not coming from the what? From the Minister of Finance. Now, there is an officer in each of the ministry that is meant to monitor how those things are being what? The money allocated to that ministry, how it's meant to be spent, and when they incur expenditure and when they make payments, they will now use this particular book of account to monitor that. Are you with me? Now, for you monitoring, you can see that this one only relates to payment and what you purchase. Now, we have the line number. Line number is only meant for what? You numbering what? Those transactions, 1, 2, 3. The date when the transaction takes place, the PV number, that's payment voucher that's used for the payment, the particular, the person you paid and what you paid that particular person. What do you pay for? How much do you pay? Now, cumulatively means what? You are adding that money you paid. The first one, 20,000. Then you also pay the second payment, happen to be what? 15,000. When you had the first payment and the second payment together, you have what? 35,000. Then, out of the money allocated to your ministry for this particular transaction, do you understand? How much is it? That is what we refer to as what? Balance. How much is the money being given to you? How much do you end up spending? You'll be deducting the what? The amount you paid from the balance as the transaction is what is flowing. Then the one that you did not make any payment for, we refer it to be what? Liability reference. When you order for something that they should supply you, then there is a liability in terms of what? LPO. That LPO is the liability reference that somebody supplied us this particular goods. This is the evidence relating to the LPO. Then when the payment is made, then they will issue what? Payment voucher. Then liability incur. How much is the amount of what they have supplied you that you have not paid for? Out of what they supplied you, then you pay the sole amount. That is the liability cleared. Then the outstanding what? Liability, which is the one you are still owing. Then the remark is showing, is it the payment you have made or you supply? That one will be on that remark. Then uncommitted balance means what? The money you have not used. At any point in time, the balance in what? Line 7 and the balance, uncommitted balance in line 13 must be the same at all times. You need to follow them. As deduction is taking place at this end, it must also have effect on the uncommitted balance. These are the things you need to follow from beginning to the end. Any question before we now look at the question? Hello?
Yeah, together.
So you can go.
Okay. Now, well, let's look at it one after the other. The first transaction, can you help us out? Well, let's go. What's the first transaction? Can someone help us to read the question? We can be able to from the beginning.
Appropriation
Starting
for
from the beginning.
The following transactions were recorded in the DVEA books of the Ministry of Education in respect for the purchase of stationery. Thus, 1.
Okay. Now,
1st August.
Now, on
20.
that, excuse me, sorry, let me do something for you because when you are doing it in the exam, I will not be there. Now, you made mention of something just now. I don't know whether you can still recollect. You are giving head and subhead on what you read just now. Abi? The service they render is for what? Stationary. Is that not so? That's what you said, Abi? Is it correct?
Yes.
That's the stationary. Under what head is this particular transaction is all about? You were given in the question, check.
Ministry of Education.
Is Ministry of Education, there is a particular figure that will be given to you as head of that stationery. Expenditure of that stationery must have a particular head.
DVEA book.
EA.
That is departmental vote allocation, expenditure allocation book. Do you understand? Now, coming down to this place, we have the SW/AIE/RIE number is 04. The head and subhead. Go down to the question. The head and subhead of the stationery is 502/05. Can you see it?
No.
Go down to that question. Down, down.
Yes.
You can see it, Abi, which means the head of this stationery that they allocate is what? 502. We go to the question solution page. We put what? 502 there. Why? The subhead is what? Is 05, Abi?
Yes, sir.
We have answered that part in there. Then, now, we were given AGW, that is annual general warrant. But the annual general warrant they raise at this end is what? Under that place, can you see SW/AIE/RIE?
Yes, sir.
That is the warrant that they use for the payment of that particular transaction. And if you look at that my guy that was reading the question from the beginning before, he made mention of something to us here, saying that 1 August 20XX authorized appropriation for the year was 1 million naira. Is that not so?
Yes,
that
sir.
is, they've allocated 1 million naira for stationery in the Ministry of Education. Is that clear?
Yes, sir.
Now, that will now also come to this part. Now, this one, SW/what?
AIE.
AIE/RIE. The number given to you is what? Is 04. Is that not so?
04.
04. That's for the authorization to take place. Then the amount given to you is how much?
1 million.
1 million.
1 million. That is it. Then any other thing relating to this, but we're not having any other information. We ignore and move on. Then we now come down to this place. Line 1, that's first item. What's the first date of the transaction? 01, Abi? 08 20XX. Is that not so?
Yes.
Okay. No PV relating to this. This is appropriation. Appropriation. No payment. We'll put it under the balance. Excuse me, let me create a column here to put the naira value under the. Now, this. Now, that appropriation will appear under the balance. That is the money you have at hand that you have not spent anything on. The same thing you have at that end must also be what you have here. Do you understand? That is the balance, uncommitted balance, that the money you have not even touched at all. This is the balance you started with at the beginning of the month. Then, what are the other transactions we have there? After the appropriation, we have posted the appropriation. Then the next one is what?
It's 2nd August 20XX. Paid 45,000 for the purchase of stationery from Ogunuga Bookshop.
2nd August, Abi?
Yes, sir. Purchase of stationery from Ogunuga.
Okay, we just say stationery. Ogunuga.
There is a PV number of 004.
What is the PV number?
004.
004. 004. How much is the money you make payment for? That's our first payment, Abi.
Yes, sir.
How much?
45,000.
45,000, Abi.
Yes, sir.
Now that 45,000, since we are looking at it cumulatively, under the payment, cumulative payment, that 45,000 will also appear there because we don't have anything before that. It's like we have a 0 plus 45 is 45. Then from the balance you have, you make, how much did you pay out? 45. You remove it, you remove 45 from that 1 million. The balance you have is what? 955,000. Then go to what? No, there's nothing like liability reference here. No liability incurred, no clear, no outstanding liability. What did you do? The remark payment. Payment for stationery. Is it clear?
Yes, sir.
Is that clear?
Yes, sir.
Now, the payment simply means 1 million minus that 45 you made payment for here. You also have this. What's the next one?
6820XX, 50,000 paid on PV number 0005.
What date?
6820XX.
Oh, okay. On what PV number?
PV number 0005.
000, Abi?
Yes, 0005.
Okay.
For the supply of stencils from Abiola Bookshop.
You can indicate the name since you have a remark in order not to be duplicating our effort. Is it clear? Disallowed. Do you understand? The person you make the payment for, under that remark, we indicate what you make payment for. Is it clear? Here, Abiola Abi.
Abiola Bookshop.
Abiola Bookshop. How much did you pay?
50,000.
Make payment of 50,000. 50,000 plus 45.
95.
Then 955,000 minus 50,000. We have 905. Is that not so?
Yes, sir.
Then we come here. Payment for what? What did we pay? What do we make payment for?
For the supply of stencils.
Stencils. Payment for 10
stencils.
How much? Then we now deduct it from this. Minus 50,000. What's the next one?
10820XX.
Item number 4. 10, 8, 20, XX. Okay.
Issued LPO number 0044.
Now, look at that one.
LPO.
The LPO came from who? Which company?
To Lambos, issue LPO 0044 to Lambos Bookshop.
Lambos Bookshop. You will not put anything under the payment. It's like you have a zero, nothing is there. Then the cumulative will continue. 0 plus that. This plus 0. You still have the same figure. Is it cleared? Is it cleared?
Yes, sir.
Then order the balance. That balance must also minus 0. The balance still remains the same. You move down to what? What is the liability reference? LPO what? What's the number of the LPO?
LPO number 0044.
0044. Abi?
Yes, sir.
How much is the liability incurred on that? Because we have not made payment.
100,000.
100,000. Do we do the payment for that 100,000? No. No payment. Outstanding liability, we have not, what we are owing is 100,000. It appears here. We incur 100,000 and we did not make any payments in that period. That for that particular what transaction. We now say supply of what?
Supply for photocopy papers. Supplying of photocopy papers.
Supply of photo
copying papers.
Copy papers. Okay. Now, this one, 905,000 minus the 0 payment, it still remains the same. Nothing has happened. What's the next one?
18820XX. Settled Lambos on account on PV number.
180820XX. We settle Lambos on what PV number?
0006.
1, 2, 3, 6, Abi?
Yes, sir.
Lambos. How much is the money?
They didn't
100,000.
specify 100,000. Okay.
The money we are owing Lambos is 100,000. That is the what we bought from Lambos based on the reference there. Exactly. Then that 100 plus this give us this minus this. That's 905 minus 100. We have 805. Then come to this place, liability reference. What's the reference we are making payment for? LPO this. What is the payment we are making? We have made payment of 100,000 out of this. Now, 100,000 minus the outstanding liability, 100,000 minus the liability we have cleared, we have 0. Is it cleared? We are not owing anything now. Then, which means payment for photo copy paper. Abi?
Yes, sir.
Then we move down to this 90 this minus the payment we did, which is this, becomes the same thing with that. The next one,
23/8, 20
2308, 20XX. What
We
happened?
paid 20,000 for stamping pins and staplers.
On what PV number?
PV number 407 00007.
Okay, 1, 2, 3, 4, 7. Who do we purchase that thing from?
From Orita Bookshop.
Orita Bookshop. How much do we pay?
20,000.
20,000. 20,000 plus the cumulative payment we have before. That give us what? 15,000. Then 805,000 minus the payment we did. We have 785,000. Then we move down to this place. Payment
For stamping pins and staplers.
payment for staple pin, abi?
And staplers.
Staple
Pins.
pins and staplers. Okay. 805 minus the payment we did.
70.
That's all our committed balance. What was the next one?
26/8.
2608 20XX.
PV 0007 for 120 was raised for payment for typing sheets to CSS Bookshop.
They rate a payment voucher, abi? How many? What was the number? PV number?
0007.
Who do we make the payment to?
So CSS Bookshop.
CXS Bookshop. Okay.
Sorry, is it possible to have two double PV number?
They are not the same thing. Look at it.
Okay, one
One
is
is
40, one is 30.
yeah. How much is the money we paid?
120,000.
120,000. 120,000 plus cumulative payment. Then 875,000 minus the current payment, we have 665,000. Payment
For typing sheets.
for typing sheet. How much? Uncommitted balance will be this minus the payment we did. What's the next one?
27/8. Issued LPO.
2708. They issue what?
LPO number 00045.
LPO number what?
00045.
45. Okay. I'm with you. What's the amount incurred on that?
300,000.
300,000. Liability cleared is 0. Outstanding liability 300,000. Adding B, we have not made payment for that 100. Do you understand? We are going to add it together. Is it cleared? Is that cleared?
Okay, we will add it together. It will now be 400.
400, but we have done the payment. That is why we're having 300.
Okay, okay. Outstanding.
Then supply of what?
Duplicating papers to Oloru Stores
Supply
Limited.
of duplicating papers. By who?
So Oloru Stores Limited.
Oh, Limited. Okay. The next one.
38.
What do you say?
30 August, on the 30th of August, settled 300 naira on PV
30th
number
of August. Settled
300 naira on PV number 00008 for the purchase of carbon papers to Dozy Bookshop.
from the Dozy Bookshop, Abi.
Yes,
Which means
sir.
that's not the amount. That 300,000 is not from the. It's not for Olorus. You need to understand that. Is it clear? It's not for Olorus. Do you understand? It's another store that they saw that gives that they bought something from. Now, what is the PV number for that transaction?
PV number 0008.
000 what?
8.
What was the name of the organization that supplied?
Dozy Bookshop.
Dozy Bookshop. How much we pay?
300,000.
Cumulatively, 300,000 plus the. We people who did not follow up with me on this. Did not come attention. This one is 0. 0 plus this. Then here is this plus 300,000. We have 635. Why here? 6 this minus 300,000. We have this. Then being payment for what?
Purchase of carbon papers.
Payment for purchase of carbon papers. All over. The next one.
31 August. Paid Oloru Stores Limited on accounts.
31 August. They pay Olorus, Abi?
Yes, sir. Oloru Stores Limited on accounts.
On what PV number?
0009.
How much do we pay? We pay Olorus, Abi?
The amounts we are owing him before.
How much are we owing? 300,000.
300.
300,000 plus the cumulative payment.
That is 935.
Then we come here. 365,000 minus the current payment. We have 65,000 as the balance there. Now, what is the liability reference for that Olorus?
PV number 0009. They said PV number 0009. Sir, PV number 0009. Okay.
We've done that. LPU.
Okay. I'm sorry.
We did not incur any liability, but we clear liability of how much? 300,000. Okay. That 300,000 minus what we have here. This remains 0. Then this will not be payment for what?
Payments on accounts.
Payment for what do we buy? What do we purchase?
I'm trying to
Duplicating papers.
Duplicating
Payment
papers.
for duplicating papers. The next question.
That's all, sir.
That's all. That's all about it. Any question?
Excuse me, sir. It's only in the ministry they prepared this book.
Yes.
And
You
who
can see it.
prepared it? Where are they submitting it to?
It is meant to be monitored by the head of the ministry. And the accountant general also have survey on that. It's part of the books of accounts to be managed in the ministry. Any other question?
So there won't be any balance adding it up, doing this and doing it.
No. Any other question? Any question, please? Any question?
No, for me.
Okay. Absent of no question. Let's look at the B part of the question. What does the B part of the question say we should do?
State 5 means that can be adopted by the Nigerian government to control the public expenditure.
To control the what? Public expenditure. How are we meant to control public what? Expenditure? One, we use what? Issue of warrants. We use warrant to control what? Expenditure. Warrant simply means authority to incur what? Expenditure that must be released to the Accountant General by the Minister of Finance. Without what? Authority that Accountant General can do the payment, Accountant General must not spend any money from the public purse. That's number one. Number two, we use budget also to monitor those expenditures we are meant to do. Hello?
With that number one. Sorry.
What do you say?
Come again with that number one, please.
That number one, there is what we call warrant. Warrant is the document of authorization for public expenditure to be incurred, which must be released by the Minister of Finance to the Accountant General, which is giving him the authority that, okay, you can spend money from the public purse. Without that particular authorization, no power that Accountant General has to spend money without approval. Do we understand? Simply means warrant is what? One of the documents of controlling the public expenditure. The next one is what? Preparation of what? Annual budget. Annual budget is meant to be prepared before any money can be spent on any item in the public sector. no money should come out without the budget approval. When money wanted to come out without what budget approval, it must be in line with the what? With what we called provisional what? Warrants. The provisional warrant is the warrant to release money before the approval of budget for government activity to continue, not to delay the government what activity. That is the purpose of what we refer to as what? The warrant, what do you call it? The provisional warrant. That's another means of controlling what expenditure. There must be preparation of budget must be prepared before money can be spent on that. Then Accountant General also release what? The guide on how to record all the accounting transactions. Voucher must be issued out for any transaction that is meant to what? Has to do with what? Payment. Voucher must be released. In line with that voucher, there is what we call segregation of duty as one of the internal control system in the public sector. Internal control means that various control that can be adopted in order to monitor the activities and the what? Expenditure in the public what? Sector. Under that, there is what we call segregation of duty. The person that is meant to release the money, there must be what? A voucher that must be approved by the officer in charge. The person that will approve the voucher must not be the same person that will initiate that transaction. The person that will initiate must not be the same person that will authorize. That is how it's meant to go. Then, apart from those 3 or 4 we have made mention of, then another means in which they used to control that, there is what we call National Assembly what? Expenditure control. National Assembly expenditure what? Control. National Assembly also dare to control the expenditure by using the following what? Means. We have what we call antenatal and postnatal expenditure control. Prenatal are things that are meant to be carried out, that are meant to be done by the National Assembly before the approval of the budget. That is what we call antenatal. The expenditure control put in place before the approval of the budget by the National Assembly. Why immediately budget is being approved, they will put in place what we call postnatal, that is various control that are meant to be put in place by the National Assembly in monitoring the public spending. Simply means you cannot just spend the money and you come and tell them that you did not see the money. It's not allowed. Any question? We also have what we call departmental or ministry control, where all the account officer in charge must prepare and update their cash book and other documents on a day-to-day basis. That's another control. Any other question? Please, any question?
Sir, not on this topic. I just want to ask, is this your 2nd or 3rd class with us?
Yeah.
It's the 3rd one, sir.
This is 3rd class.
Okay, sir. And what's the beginning of this particular 3rd class? I mean the topic.
Public finance officers.
Okay, sir. Thank you, sir.
Sir, come again. What did you say? What did you say?
Public finance officers. That's the topic for this. My first topic was Introduction to Public Sector Accounting and Finance. Well, I now move into this. Our next topic is revenue source of government revenue. That's our next topic. Sources of government revenue.
Sir, your name, sir.
Wasil Yusuf. Sources of government revenue. That's our next topic. Now, I want to beg every one of you, please, if you can be able to talk to others, all those ones we have done so far, we can say they are not really what in depth as public sector accounting is concerned. Starting with source of government revenue, we are now into the system purely. Immediately you did not meet up with this source of government revenue, all those principles you don't have idea and the procedure you are meant to follow, you can find it very difficult to know what to do. That's why I'm begging you, tell others to also be part of the system. Then we can be able to have a better understanding. That's our next topic, how it's going to look like. Yeah. I'll be having another class now, any moment from now. We have about 12 minutes to stop. Do you understand? Under the new topic we wanted to look at, we are going to look at federation accounts. We are going to look at consolidated revenue fund accounts. We are going to look at capital accounts. We are going to look at contingency accounts. We are going to look at sharing what allocation formula in distributing the revenue among the federal, state, and local governments. All these and the principle in charge, the principle involved in distributing those money, we are going to look at them one after the other before we move to the next. Now, someone is raising up his hand. Goes.
Yes, sir. Sir, please, I just want to take us back a little. At this departmental vote we just concluded now. So, is this how they will leave the balance?
The balance.
Is this how they will leave the balance where you have
yes.
Under
the balance you have 65. Do you understand? Hey,
yeah.
Sorry, we did not effect it. Thank you. Good. Thank you. Now, what is the payment we did here? Do we make any payment under this place? When we supply, no. That is minus 0 payment. Then what payment do we do here? We make payment for 300,000. Then the last one, what do? We also make payment of another 300,000. At any point in time, the uncommitted balance and the balance here must be the same. At any point in time, the two must be the same. Any question? Any question?
No question.
Okay. Now, our next class, we are meant to discuss sources of government revenue. And the area we are going to cover, I've listed them for you. That we are meant to look into what we call federation accounts. We are meant to look into consolidated revenue fund accounts. Also meant to look into capital accounts and contingency fund accounts. The principle behind the distribution of public revenue among the states and those nations that are oil-producing nations. How do we do the allocation? Who are the agencies that are collecting money on behalf of government? How do they collect the money? What are their own benefits in carrying out those transactions? Everything are going to be looked into one after the other in our next class.
Excuse me, sir, before we leave, this question 7 and question 8, they are this same topic.
Yes.
Okay.
You can also lay your hands on them. Do it one after the other. When we are in class, the one you don't understand, we can solve it together. Is it clear?
Okay, sir.
Wow. Thank you very much for being part of this class. Enjoy the rest of your day.
Thank you.